Florida has always been a gamble. We gamble on the weather, we gamble on the rising tides, and for decades, we gambled on the idea that a home in the sun was the ultimate American safety net. But in March of 2026, that safety net hasn't just frayed, it's been replaced by a hollowed-out version of itself. If you listen to the official press releases coming out of Tallahassee this spring, the message is clear. The crisis is over. They point to 17 new insurance companies entering the state. They talk about an 8 to 14% rate decrease in South Florida. They tell us the litigation era is dead and the market is finally stable. But if you talk to the people living inside these homes, you'll find a much darker math. The stability of 2026 is an engineered illusion. It is a world of forced migrations, 150-day emergency windows, and a new legal architecture that allows insurance companies to take your premiums while slowly stripping away your protection. For the first time in history, Florida isn't just fighting the Atlantic, it's fighting a mathematical reality that no longer adds up for the middle class. To understand the 2026 trap, you have to understand depopulation. Just 3 years ago, Citizens Property Insurance, the state-backed insurer of last resort, was the only thing standing between Florida and a total real estate collapse. It had ballooned to nearly 1.5 million policies because private companies were fleeing the state in droves. By March of 2026, that number has plummeted to less than 400,000. On paper, it looks like a miracle. It looks like the private market has returned to save us. But look closer at how those people left. This wasn't a choice. Under the new 2026 mandates, if a private company offers you a policy that is within 20% of your citizens' rate, you are legally ineligible to stay with the state. You are forced out. And who is waiting on the other side? Startups. Many of these 17 new companies are what analysts call shell carriers. They have no long-term track record, they haven't survived a Category 4 or 5 hurricane hitting a major metro area. They are effectively gambling that the 2026 hurricane season will be quiet. If it isn't, these companies are designed to file for insolvency, leaving the taxpayer to clean up the mess once again. We haven't fixed the risk, we've just moved it into the shadows. Then there's the rate relief lie. Yes, the base premium for many Floridians dropped slightly this year, but for the average family, the total cost of keeping their home has actually gone up. As of January 1, 2026, the state's new mandate is in full effect. If you are insured by Citizens, you must carry separate flood insurance, regardless of whether you live in a flood zone. For any home valued over $400,000, this is now a non-negotiable requirement of homeownership. The math is brutal. A homeowner might save $500 on their property insurance renewal, only to find a new $1,800 flood insurance bill waiting in the mailbox. It is a hidden tax on the Florida dream. For the middle class in inland counties like Orlando or Ocala, places that haven't seen a flood in decades, this mandate is the final straw. It is wealth erosion disguised as market stabilization. For years, the 15-year roof rule was the boogeyman of the Florida market. If your roof was old, you were uninsurable. In 2026, the legislature passed HB 815, which was supposed to be our shield. It prevents companies from dropping you solely based on the age of your roof if it's under 15 years old. But the insurance industry is always one step ahead. Enter the actual cash value, or ACV, loophole. In 2026, more companies than ever are shifting their policies away from replacement cost. What does that mean for you? It means if a storm rips the roof off your house tomorrow, the company won't buy you a new $25,000 roof. They will look at your 12-year-old shingles, calculate their depreciated value, and send you a check for $6,000. You are left to find the other $19,000 out of your retirement savings or a high-interest loan. They're insuring your house, but they're not promising to fix it. The most alarming detail of the 2026 season isn't the storms, it's the balance sheets. Financial researchers have started blowing the whistle on a practice called affiliate siphoning. These new, smaller insurance companies often look like they're struggling on paper. They report thin margins and low profits to justify keeping your premiums high. But look at their expenses. They're paying tens of millions of dollars in management fees and service contract to sister companies owned by the same executives. The profit isn't gone, it's just been moved. It's being tucked away in unregulated affiliates where it's safe from being used to pay out your claims. While the homeowner is told there isn't enough money in the system to lower rates, the executives are hollowing out the companies from the inside. All of this has led to a two-tier real estate market that's freezing the state's economy. On one side, you have new construction, homes built to the 2024 codes that are easy to insure. On the other, you have the uninsurables. These are older homes, the backbone of Florida's communities, that are becoming impossible to sell. Because a new buyer can't get an affordable insurance quote, the bank won't issue a mortgage. This has effectively killed the liquidity of older neighborhoods. Sellers are being forced to accept cash-only offers from corporate investors, often at a 30 or 40% discount. The equity that families spent 30 years building is being erased in a single afternoon. The silence from Tallahassee this spring is perhaps the most telling sign of all. The government knows the architecture they've built is fragile. They know that the 17 new companies are a temporary fix, not a permanent cure. They are praying for a quiet 2026 hurricane season because they know that if a major system makes landfall in a populated area, the stabilized market will collapse like a house of cards. Florida isn't just an insurance market anymore. It's a laboratory for what happens when climate reality meets financial desperation. As the 2026 season approaches, millions of residents are left to wonder, is my home a sanctuary or is it a liability I can no longer afford to keep? The sun is still shining in Florida, but for the first time, the shade is looking a lot more like a trap.